And also, we've got Thabo Dloti, the Chief Executive Officer of Liberty Holdings, which holds about $60 billion in assets in this continent. It seems the last couple of days your company's been busy selling off some of the debt from African Bank. Just explain to us exactly what's happening there.
No, I think the main part we were responding to is that the African Bank resolution that has been led by the South African Reserve Bank and the curator has obviously been a great milestone for us, because it's leading to the launch of the Good Bank, which is going to be important for us as holders for the fund management community, including our own Stanley, which are the holders of the paper that is obviously underpinning that bank. Clearly, as soon as that paper becomes tradable, it will allow our investors then to begin to trade. Of course, we are waiting for that big milestone of the launch of the Good Bank.
And what you've been here for a few days now. What's the feeling you're getting amongst investors here and amongst your peers? The talk of business on this continent?
Yeah, I think there is a great passion about making sure that the continent is integrated into a global community. Particularly, I've been attending a lot of sessions about how do we make sure that the financial infrastructure that we have in pockets of the continent actually is used broadly to connect the rest of the continent. That's been very exciting. There's been positive mood around the developments, a positive development that have happened around the core regions, obviously, that are leading the growth, both in the east, west, and the southern region, that are leading the drive of the economic growth, and that's an exciting development from my point of view.
Thabo, you've talked about the cost of doing business being one of the biggest liabilities to the sovereign balance sheet. You were talking specifically about South Africa at the time, but I want to get a sense of whether or not the same would apply in West Africa, where you're operating, in Kenya, in the east as well.
Yeah, sovereign ratings determine obviously the level of the cost of borrowing, so to speak, if you were to expect it, if you were to put it that way. Clearly, to the extent that they are deteriorating, either because raters are seeing deteriorating environment, local environments, they do impact on the ability of those markets to access capital. But we've seen positive improvements across the region, and we believe that those should, in time, factor their way into the ratings, which will improve the cost of actually, which will lower the cost of raising capital.
And Mr. Dloti, looking to the future now, I understand you're looking to expand in Nigeria, maybe looking for acquisitions in the asset management, maybe the insurance market. What are you picking up there? What are the inroads you're seeing?
Absolutely. We have been operating in Nigeria using the health business. Clearly, our mainstay businesses are the asset management business and the insurance business. We have been on a path to make sure that we find right opportunities to establish ourselves through acquisitions. Yes, we are on that path. Like all acquisitions, they take time to consummate, but absolutely we are set on finding the right opportunities to actually establish ourselves in Nigeria in those two areas.
How are you finding the ease of doing business across the continent with different governments and different systems?
Yeah, increasingly it's becoming a lot easier. I think there is a greater acceptance that as a continent we need to work and collaborate together. It helps that across a number of industries, particularly the South African companies are obviously operating in different parts of the world. So yes, it has improved quite significantly. Secondly, I think there is a greater acceptance within the broader African community that we need one another, we need each other's expertise, and that is obviously facilitating. Yes, there are bureaucratic blockages here and there, but then where else you don't have those?
This is the 25th gathering of WEF here. A lot of people are taking stock. I mean, just cast your mind back, even 20 years doing business on this continent. How have you seen it change?
I really think that we should really celebrate the fact that infrastructure has improved quite significantly. A lot has to be done, and it's easier. Infrastructure for the WEF to host it, the infrastructure for us, visiting the different countries. That is something that's really we should celebrate, because a few years ago we used to complain a lot about that. Nobody complains about that anymore, and we take it for granted. Secondly, communication. It's a lot easier. It's much easier for us to reach out across the continent far quicker. So these are small but very important things that actually are important for our development.
So what next for Liberty?
Absolutely. Growing in the continent is obviously a key part of our strategy. We continue focusing our attention on that. We continue making sure that the investments we have made already deliver the returns. You're talking about us managing 60 billion. It's important that we grow those 60 billion because they belong to others, to substantial return for our investors. That continues to be our challenge.
And which countries would you say you're looking at? I mean, apart from Nigeria, we mentioned.
Yeah, and so we are already in a number of countries. The way the structure works is the countries we are in, for example, with health, we are trying now to implement the short-term and the long-term insurance businesses. For example, we are doing a short-term insurance in Botswana on the back of the asset management, and in long-term insurance we'll be doing the similar thing in Uganda. So in all the countries, really, we are trying to build a full suite of our offering as opposed to only focusing on one product line.
Mr. Thabo Dloti, the Chief Executive Officer of Liberty Holdings, thank you very much for your time and your insights, and the best of luck.